Hello, beautiful people. I'm going to go over my GU trade that I took the other day. It was a situation where it was in profit, and of course, it is no longer in profit. I've actually closed out of the trade, got stopped out. So let's go ahead and review what happened. On the weekly time frame, when I opened the chart, I noticed that the market was at a current supply zone. This was the last buying candle that pushed this market down. So my bias was to sell because we were at a weekly level. However, also you can see that over the past several months, the market had been pulling back into the zone. When I dropped down to the 4-hour time frame, I noticed that we had, let me go ahead and replay this before this market pushed up. This is news, that big blue candle. Alright, so I boxed up my Monday's candles and noticed the market had, when it closed, it was below the 50% of Mondays. So I was looking to take a sell for a trend continuation to retest that. Also, on a bigger scale in just this area, you can see a beautiful M pattern where the market actually broke and closed below. And so I was looking to sell. You also see a head and shoulder pattern as well. Now, when I saw this market, this move had already happened. So I had caught it pulling back. So when I go into the 1-hour time frame, I noticed that, hey, I see another head and shoulder pattern right here. I have another sell opportunity. And so one of the things that I had used for confirmation was my overall top-down analysis, 50% of Mondays, head and shoulder pattern on a higher time frame, and then the market pulling back. Another head and shoulder pattern right here, where this market had broken below, well, it was an M pattern. The market had broken below this neckline. My only thing that I can say that was an error on my part was this wick right here, because there's actually candles in this wick. So I could have waited until the market actually closed below here before I actually can get into this trade. Another strategy for justification is the signal candle, where this is the market closed below this candle right here, and I waited for the pullback right here. Now, as you can see, the entry of my trade was here. Stop loss was just a little bit above this swing high instead of this one, and I had been in profit. I set my take profit at the previous low, which was this wick. Now, on a larger scale, one of the things that I could have done was, instead of taking the trade at this wick, at this previous low, I could have taken it at the most recent low. And however, the market never went down that far. It actually consolidated in this box. So I was only in profit from here to here, 25 pips. And so I should have taken some profits, which I did not. I wanted to hold this trade so that it could return back to the previous low and continue dropping. I was hoping that it would come back down to this demand zone. Now, my lesson learned from this is to trade with it, see what I think is going to happen, where the market's going to go, especially since we're in a, even though we're in a weekly level, the market started to move sideways. You know, taking your money and run is a key, is very important in trading, and there's always going to be opportunities to re-enter the market if it was to drop as low as I was hoping. As you can see, this market ended up stopping me out right here, and then news came out the very next day, so I was already out this trade. And I believe my lessons for this is to take profit when I'm in profit. This head and shoulder pattern isn't the best, but even though that's not the case, the signal candle strategy, once this market had gotten back into the zone, I would have been able to take entry up here, which would have gave me a better entry. So a better entry here, and I would have gotten a better risk to reward ratio, and I would have gotten 50 pips. So making sure I follow the strategy to the T. And even though I see other setups, so that is what I learned from this particular trade. All right, take care, everybody.